So it's the weekend, so I do my hindsight is the best trading. Actually, on Thursday, I took a win on Thursday, but there were really good trades in the morning session, in the AM session. Try to do it as quick as possible. What you can see here is we have an H4 level of the Wednesday before. Price went into that level at open, but didn't tag it. It left a little bit of space, which is always interesting because my experience is that it will get tagged in the end, same day. What do we have here? This is, I don't know if they call it rounded edges, but this is really generating liquidity. So we have this move down. There is an H1 level here. I think there was also an H4 if I'm not mistaken. And this is interesting price action. So normally, okay, I do not really apply support resistance, but I do think this is interesting. Price was hovering here as well. When I zoom into the 1 minute, what you can actually see, I have to go further back. I did a lot of back testing today, this evening. So what you can see is the following. So we have, there's this gap created. And what happens next? We see that price is printing a SMT. So we have, it was actually not very clear because the structure looks the same, right? So we have a low, a lower low, and then a higher low, but this already occurred before. So here we have a first higher low, and here we actually have a lower low. So that gives us the change in the state. I tend to draw it here if it's close to one another. I consolidate, and here we have the low printed here. So what happens? Here is my level. I see a inverse fair value gap, at least a fair value gap that I want to see stopped. This is really the same setup as from the evening, from the PM session. Support, support, breakdown, resistance. Here actually get this dip, but due to this SMT, let's see how it looks on the 5 minutes. Yeah, so 5 minutes we have, you could say here, but this is where you have a clear level evolving. There's maybe a gap here. And what do we have? Yes, not so much. So this is actually clear on the 1 minute. Okay, I think I have to go back again. This is so unfortunate. So we were, what were we? Is this even faster? I don't know. Okay, so here we are. I'm not going to zoom out. So we got this retest, breakout. So we can decide to go long here with a stop over here or here. Or take the retest on the change in the state. So let's say we did it perfectly. We go long. There are no gaps here. So I would take this as a stop, or maybe this as a stop. This would be the safe bet. And what is my target? The target is at least taking out all these highs. So that would be here. That's a 1.78. It's okay. I mean, actually the trade went really quick. But of course you have confluence here with the H1 level, which is a bit less clear, but taking into account you wanted to go to the EQ of the last move, then you could target this move as well for maybe for a run. So this is the first setup. Then what price did, I call this my 11 AM reversal. What is the 11 AM reversal? When price starts creating a distributive range, or you could say a head and shoulders pattern. Now I am not a pattern trader in a sense that if I see a head and shoulders, this is not a valid setup immediately for me. But when we have the H1, I tend to look at the 5 minute change in the state. So we have this high here, so I draw this one out, the change in the state, and what we have is a breakdown. And normally what happens at the 11 a.m. reversal, if you get a breakdown from the change in the state, especially when you have confluence here with a fair value gap which held but did not hold, then I take the golden fib of the last move down, and you can enter at 50% with the stop above the last high, which I would then take here, and then target your liquidity, which would be here, TP, or taking into account that we left this small gap, taking it all the way down to that H4 level of yesterday. Now what happens? So you can trade this on the 5 minutes, which is relatively okay, but you have a lot of chop in the meantime. For confluence, you have this SMT formed, a lower high, while actually ES is doing a higher high, which confirms that the likelihood of this moving down violently is bigger now. It's a greater chance. My experience so far with the 11 a.m. reversal is that it tends to move slow until it doesn't anymore. So there's a lot of chop here during, what is this, 45 minutes minimum, maybe even an hour, 10:25, yeah, like this is an hour of chop and then a fast move down. Actually, if you look at the 1 minute, you can already see that there are plenty of opportunities to take trades in between. So here you have a fair value gap that got inversed, and then you can trade it down. So you trade the close, stop here, oh no, sorry, stop above. I take the last wick before entering that above, let's say the last wick above the gap, and then targeting this wick or maybe even this wick. This wick is the safest, highest probability, and you can do the same thing on the way up. Especially you have confluence with this level, you have this level, a break above here actually allows, but this would be like very low probability, at least for me, because you've broken the change in the state. So the chances that you reverse here or here are actually quite high. Now you can get a 1.4 out of it, but I would not trade that. But actually, when you see a gap evolving like this, I pull it forward, because generally that tends to have weight, especially when such an inverse level creates new gaps. So we have a gap here, which then should hold a support within the bigger inverse fair value gap support, then it breaks down, and then it suddenly acts as resistance. Again, last wick up, and then the drop down. So this is an important note now also for myself. Yeah, this is good. And then here you can also see, because the bias here is short, you can here also see that they try to retest, close above, but then it fails, and it retests again. So these inverse fair value gaps are useful to understand where price action is going, to orient, to get an orientation of the direction of price, and how well price is holding these levels, and if you can expect some, let's say, more bullish or more bearish price action. So you can take shorter term trades, but on the 5 minute, the trade, in my opinion, the ideal trade, because you don't want to overtrade, is take this 50%, stop at the high, and then just target maybe just a change in the state for 2R, and then leave a runner for this level, which is actually 3.5, which in my opinion is ridiculous RR. Yeah, that's it. Those are the trades.